everyone, Weston Nakamura from Real Vision in Tokyo. Okay, so earlier this year, Andrew Bailey, the governor of the Bank of England, said, quote, "I'm afraid currency and crypto are two words that don't go together for me. They fluctuate in value substantially, which is why they are on a whole not a good medium for making payments." So he was talking about El Salvador, having adopted Bitcoin as its national currency, essentially saying price swings in BTC make it particularly bad for payments. And he goes on to say, "What worries me most of all is, do the citizens understand the nature and volatility of the currency that they have?" Whether or not you agree with Andrew Bailey, indeed, Bitcoin is a volatile asset. Certainly far more so than, if you compare to like G5 major FX pairs. So dollar, the euro, the yen, sterling, Aussie, CAD, so on and so forth. So for example, 1 month realized volatility on dollar yen is like under 9. And 1 month vol for Bitcoin is at 65. So yeah, considerably more. But if Bitcoin is too volatile to work as a nation's currency at 60, 70 vol, then what the hell does that make the Turkish lira, which yesterday broke through 100 vol, making it at one point nearly twice as more volatile than Bitcoin? So since September, dollar lira has basically doubled as CBRT, the Central Bank of Turkey, cut rates by a total of like 5% across 4 consecutive meetings. And while at the same time, Turkish inflation rose from 18 to over 21%. This is based on government figures. So on Monday of this week, the lira dropped another 10% intraday to another all-time low, and this is following President Erdogan over the weekend, once again undermining his own central bank, who said just days earlier during the Thursday rate cut that this would be the last of rate cuts for this cycle. Erdogan came out over the weekend and said more rate cuts to come, in line with his being a Muslim, as Muslim law looks down upon usury. And really, who doesn't? Okay, but there's predatory like usury, and then there's basic laws of economics. And according to, I guess, Erdogan's like interpretation of scripture, Muslims are monetary doves. So he once again went against his central bank's message of cut and hold and started touting more cuts and lower rates ahead. And so therefore, on Monday, the lira got destroyed another 10% intraday. Then, Monday evening, Erdogan announces a brand new policy framework to stabilize the lira, and the lira had this massive, massive reversal. So what they announced was that the government will essentially, they will cover FX losses in lira savings deposits that exceed the interest rate, which is basically, it disincentivizes Turkish citizens to hold foreign currencies outside of the lira. And then they also are offering, non-deliverable forwards to exporters, basically to hedge out FX risk. They're going to remove taxes on lira investments in government bonds, and they're also going to slightly uptick the amount of, the government will match for private sector pensions. But the main part of this whole, package is this this FX losses on lira savings deposits. Those will be covered by the government. So upon this, dollar lira's 10% rally on the day basically just hit a blow off top and then sharply reversed. And then the lira went on a face-ripping rally for a 30% intraday move stronger, or dollar lira plummeting 30% down. That's more than a 10 sigma move. Lira implied vol hitting record highs, and biggest one-day gain in almost 40 years for the lira. Biggest intraday net swing on record. Lira 3-month implied vol ripped through the previous 2018 lira crisis highs, and in 2 days the lira's gained 50%. Now, what is behind this insane price action over the past week, especially that initial V-shaped move. So, Turkish Bankers Association were very quick to announce that night that over $1 billion in selling was executed, and local media reports of like over $1 billion in domestic lira inflows from citizens converting to lira had occurred. And so at that time, on Twitter, so I tweeted out, and by the way, you should follow me on Twitter at Across the Spread, because this is when I'm not going to make a video for like, every little like small market observation. But at the time I said that in the immediate term, lira price fluctuations to both the upside and the downside were highly likely like speculative traders repositioning, given that USDTRY had doubled in the past few weeks, and short covering of lira for massive profit taking was underway. But either way, the details of this brand new announcement were still very murky, and the current price action should not be solely attributed to domestic citizens like endorsement or embracing of this new confusing policy. Particularly because the announcement and subsequent immediate market reaction came after local market hours, when domestic activity would, market activity would be absent, but foreign OTC flows would be very active. But in order to understand the drivers of the lira price action, we need to understand the policy itself. So essentially, what the policy says is Turks who are concerned with devaluation and are dollarizing their savings need not do so, because whatever they deposit on 3-month, 6-month, 9-month, 12-month basis, they will receive what the bank's interest rate is at the time, and with current policy rates at 14%. And then anything beyond that incurs an FX loss will be made up by the government. So there's no need to hold so-called like hard currencies outside the lira. Now, two major like issues or questions that I have, or points. Number one, how is the government going to actually implement any of this? With what money? Right? And then number two is, like, let's say this program were to be implemented perfectly as advertised. This is on deposits going forward from now, not on existing ones. Okay, so let me break down each of those two. So on point one, right? So like the macro monetary mechanics of this, right? Economists, traders, bankers, over the last few days, they've basically almost uniformly been questioning with skepticism what this program is in various ways. Some actually say that what this actually is a massive veiled rate hike, right? So if interest rates are at 40%, currency gets hit by 40%, right? That 26% difference that would have to be paid out, like by the government, that's the equivalent of a massive 26% interest rate hike. And then others say that this will just eventually exacerbate inflation even further, because the FX losses, if those are guaranteed by the government, i.e. the taxpayer, the public taxpayer, if that's what they're going to do, then in order to do that, the CBRT, the central bank, will have to print more lira to cover these promised losses. And then if you print more lira, that equals more worthless lira, equals further inflation. And then, on the other side, if this new measure actually does work, as in it strengthens the lira, and real exchange rates rise, then that essentially negates the benefits for Turkey's exporters, which Erdogan had been touting thus far during this period of like lira value destruction as of late. So I mean that's just kind of how the broader community has been looking at it. And then if you look at markets outside of FX, outside of just lira, you'll see that there's little confidence in Turkey's new pledge, right? So like, the BIST 100, the Turkish stock market, which had been on a rally, a massive rally, in lira terms, and is now in bear market territory in the last few days, within a week, hitting limit down day after day after day. If you look at Turkish yields spiking, not coming down in line with USD TRY. Not that nominal yields in Turkey had been that much in line with FX anyway, but there's your confidence for from the bond market. And then if you look at like Turkey 5-year CDS credit default swaps, which remain at their highs, like not getting crushed below 600, 500 as one would expect if Turkey's plan was taken seriously as lower credit risk. And then on point two, like this is basically applying for like deposits going forward from now on. What I mean by that is like so Turks have to buy into this program. So they have to, from now on, no longer like flee the lira for the dollar or the euro or the yen or gold or crypto or whatever. But it doesn't mean like existing foreign currency deposits shall be reconverted back to the lira. And as of the time of the announcement, Turks held over half of their deposits in foreign currency, not the lira. Right? So if the new policy does, in theory, make the need to hold foreign currencies obsolete because the government will just make you whole against FX losses, just holding lira, it just means that there's no difference in holding lira or dollars. So I can see why, this might be taken up by some citizens going forward, but if there's no economic difference between holding a US dollar or lira, and you mistrust the Turkish government as it is, why convert your existing safe haven dollars back to lira like right now? And look, at the end of the day, real rates in Turkey are like minus 6%. This is based on the like government inflation figures. Potentially far, far worse though, like according to outside parties. So, according to take Steve Hanke, the famous or infamous Johns Hopkins Turkish statistics whistleblower. According to him, real rates are as deeply negative as minus 60%. I mean, 6% is pretty horrendous. Real rates at minus 60%? No thanks. So, with those 2 points in mind, okay, just let's now take a look back again at this insane lira price action. So basically, the lira's been on this momentum-driven plunge, right? Of 100% against dollar, euro, yen, other hard currencies since CBRT started their highly, highly unnecessary rate cut cycle against global central banks, like rate hiking biased. And so that was just this one-way trade of dollar lira or euro lira like higher and higher and higher, or lira lower. And then that abruptly reversed course, not paused. It just reversed course and then saw a lira surge by 50% in 2 days. That is insane price action. So, in my view, that was, short covering by speculators, right? And this isn't just like global macro hedge funds. A huge force in lira price action is actually Japanese retail. They have been active participants in trading lira for years. They've actually been net one-sided long TRY JPY for years since at least the 2018 lira crisis part 1. So TRY JPY is a heavily traded long pair, in part because of the massive nominal yield spread of like 20% until recently between Turkish yields and JGBs at zero. By the way, Japan retail, probably the worst lira traders I've ever seen in my life. So they've been long lira this entire time. It's been getting destroyed over years, like almost unanimously long positioned. Then finally, for the first time since I've been carefully watching them over years, for the first time, just in this past week or so, Japan retail start to finally actually position some net short, right? So it used to be well into 90% net long and like maybe 5, 6, 7% net short. So forget the fact that it's still heavily skewed to long. This like 20% short is a significant difference. And they got net short basically right at the bottom of TRY-JPY, only to have TRY-JPY go on a face-ripping record reversal rally a day or two later. So Japan retail did a massive short cover, and the longtime longs of Japan retail also rushed back in to get long. More about Japan retail and the cross-asset significance later. But so with the exception of like hedge funds and Japan retail shorts who covered their positions and short squeeze the lira at during non-local trading hours, and despite it being the end of the year for illiquid trading and this is a relatively obscure currency pair and all that, a 50% rally on a currency pair in 30 hours is not merely just a short squeeze. There has to also be new longs opened like alongside to push one directionally with that much velocity, and in size. So I was highly skeptical and suspicious of this kind of move of this magnitude over the last few days, which is why I hadn't yet commented, until I had at least figured out some sort of theory or idea or some grasp of what was going on. Then yesterday, or less than 24 hours ago, FT released this bombshell article that tied everything together for me. So the article titled Turkey's Tumbling Foreign Assets Hint at Aggressive Lira Intervention. And it basically says bankers point to very concerted effort to boost currency after Erdogan unveiled savings scheme. Essentially, what FT is claiming is that the CBRT had massively intervened in the FX markets in tremendous size, executing dollar selling and lira buying right upon the Erdogan policy announcement release. And they cite this based on different traders and bankers who are estimating somewhere around 7 billion worth of interventions that were executed in that like 1 to 2 day period. There's a chart showing also the plunge in the central bank reserves over that time period. Now, here's the key aha moment that I had. In December, until this week when the lira was getting destroyed, CBRT announced FX interventions on 5 occasions. Okay, and obviously to no avail, because the lira just kept getting destroyed. Those 5 interventions totaled somewhere around 8 to 10 billion USD combined. Let's just call it a little under 2 billion per clip on average. Now, in my last lira video, where I'm basically just in a bare, empty apartment talking to an iPhone on a stepladder, the reason I made that video was because I felt that the lira, which had already been falling steadily for weeks leading up to that point, was on the cusp of an epic accelerated cliff dive sell-off after CBRT announced FX intervention, and yet the lira continued to deteriorate, with obviously with no impact. And because I thought it was going to happen imminently, I felt I couldn't wait, and therefore just recorded on my iPhone talking to a stepladder, which is why I had a more unstructured than usual ranting and rambling in an empty room setup. But good thing I did, because sure enough, there was that was the case. So after that point, USD TRY rallied 35% in 2 weeks to all-time highs before the big reversal. But in that video, I say that there will at some point be a short squeeze, and that it will be massive, and indeed there was. But then I flagged 2 things, right? So I say the CBRT had an FX intervention, which subsequently became one of 5 interventions this month, and then I also flagged the replacing of the finance minister, and I openly say that I don't know why they did this FX intervention.
World's greatest currency. The path of least resistance is just for the lira to continue to get destroyed. And then there will probably be some short cover, the thing is that if it reverses, a short cover will be massive. So a few developments in the past week of significance, not just the fact that it's just breaking through all-time lows, which it is. You have the intervention of the central bank into the FX markets. And then you have the stepping down of the finance minister, the firing of. The CBRT intervening in the lira. So when they stepped into the FX markets the other day, I don't know why they did it. Maybe just to attempt to scare people off. Like, either way, that worked for that. There was a significant plunge in USD from peak to the bottom. I think it was about 11% move in like within an hour. Massive. But again, that was for an hour. And then after an hour, you just got a reversal, and then you have basically USD just right back to where it was. So what the hell was the point of that? I mean, I guess that's not the result they had anticipated, or maybe it was, but that's not the result that they had been, going for.
And thanks to this FT article, I now know why, or at least I think I do. So, unbeknownst to me at the time, obviously, the replacement of this finance minister and the FX useless interventions were setups for this very recent policy announcement. So first of all, if you're going to say the nation's public treasury will guarantee all depositors' FX losses, you need to get rid of any finance minister who's not on board. Clearly, this is such a radical policy that a replacement was in order. So that's what the significance of that move was, that I now realize. And then second, the FX interventions that I said, why are they doing these pointless things? Suggesting that they even know that it's useless to stop the bleeding of the lira. And it turned out that's the point. Okay, so the CBRT is down to its last round of ammo in reserves. You don't just take that and leak it out bit by bit, a few $100 million per clip. You need to Hail Mary for one last bazooka shot, right? You have what you don't just kind of slowly let out. You need to combine and make the most of it. So that final 7-8 billion, you do it all at once at market, after hours during illiquidity, and you trigger a face ripping crowded short squeeze, and you execute it right after Erdogan's announcement, because in order for that program to work, you absolutely need credibility, which is the one thing that the CBRT lacks more than it does reserve funds, and a historic mad scramble bid for lira immediately following Erdogan's program unveiling. That's what makes that program have a shot at viability in the first place. And that's exactly what they did. It's just a multi, coordinated on different fronts sort of thing. New finance minister, that's obvious. But then, the useless FX interventions part, that also that served a purpose. Because CBRT usually announces after they've intervened, as per the last 5 times they did, prior to this. They usually, they make these announcements. Even though the lira continues to work against them, they just keep doing it. But they've said nothing about intervening since Monday. They don't have to announce anything if they don't want to, for any intervention. But they announced the prior ones as precedent for, if we intervene, we say so. And no announcement thereby effectively means that this massive demand for lira following Erdogan's policy unveil, that must be domestic depositors and savers endorsement, and confidence in this grand new plan, and not FX intervention. Because otherwise we would have said so, as per our last 5 times that we did intervene and we said so. And then add in the kind of little icing on the top of, with the Turkish Bankers Authority dropping this whole now well quoted across media, 1 billion of retail buying, 1 billion of lira buying occurred, Monday night. Yeah, that may have been, but 1 billion does not swing the one directional hypermomentum 50% the other way. But 7 billion during illiquid hours can. That figure, 7 billion, that FT had gotten from their kind of unnamed banking sources, and anonymous because, of course, because you will go to jail if you criticize Erdogan or question like the figures. But that also matches the CBRT's reserves, which are now in negative territory. So what I was flagging at that time was just pieces of the setup for this, which I didn't know at the time. Can I prove any of this? Of course not. But can any of the inevitable pushback commentary on this video, who will label me a clueless mouthpiece of the whatever agenda, can these wonderfully hilarious clowns in comment sections, can they equally prove that this potential theory of mine or idea be categorically false? No, you can't. Okay? And I'm not even stating that this is like a fact or anything. I'm saying that this is what I think may be happening, suggesting a potential scenario, and at least a possibility to consider. So any pushback against a differentiated and reasonable approach, in other words, the attempted stifling of free ideas, or those who get like somehow like pissed off enough to state definitively my knowledge deficiency and like all that stuff, right? Whenever those come up, that means it's a signal to me, like, I know that I'm onto something. I also know how you're positioned and what your P&L looks like, and you're actually announcing it. And so that's what I get out of that. But for those who think that was moronic, you ain't seen nothing yet. Okay, so prepare to roid rage and smash your screen in 3, 2, 1. Now let's take a look at cross asset markets. First one's easy, BTC. Okay. Those aforementioned Japanese retail traders of TRY JPY, they're levered long Lira and Bitcoin. And like in a fictional world where Bitcoin has no other market participants and flows, BTC JPY and TRY JPY would trade with a positive directional relationship like at all times. This is the cross asset Lira Bitcoin flow. That's the flipped version of the Turkish domestic flow, which is short Lira and long Bitcoin or crypto, and vice versa. AKA, as Lira weakens, Turks are fleeing the Lira and they sell Lira and they flow into anything else, such as a digital fixed supply non-fiat asset with a few taps on a smartphone, like Bitcoin. So like Lira down, Bitcoin up, inverse. That's the domestic flow. The Japanese retail flow is Lira up, Bitcoin up, and vice versa. Risk on, risk off, basically. So when the Lira reversed, so when TRY JPY reversed and was getting massively bid up, in came the TRY JPY retail longs, and with that came the BTC JPY longs. And it seems Lira put the floor under BTC in the near term. Otherwise, why did BTC V reverse at all, let alone at around that exact time? Elon? And by the way, when I say Japan retail, I mean Japan retail, of course, but I also mean the front-running algos before Japan retail does, anticipating flows. And sometimes they actually set the trend and tone for Japan retail to follow and chase. So they kind of become a self-fulfilling reality. So if TRY JPY holds up, BTC looks like it may have put in a floor in the near term. And I'll also point out that the TRY JPY meltdown before this contributed largely to the recent BTC JPY or crypto sell-off in the first place. Okay, so Bitcoin traders or crypto traders, just keep this in mind. Keep the Lira and the Japanese retail in mind as you look at sort of, if you're kind of shorter term and looking for price drivers and all that. Okay, now to really piss off the all-knowing. And again, this is an observation, okay? Not a definitive claim by me on like explaining causation of things, okay? But just to piss off the strangely overly sensitive, here's how I'm gonna word it. The Turkish lira is driving the S&P 500 directionally. Blasphemy, I know. Okay, let's take a look at some charts. Why the V-shaped risk on in E-minis, and like I look at Nikkei obviously, but you could insert any major DM index in this, but why the V-shaped risk on? Was it Omicron headline number 87 of this past week that did it? Was it growth and inflation sentiment change number 373 of the past month or the past hour? Or how about it's week of Christmas? Fund managers are not only not working from home, but they've long closed out their books for the year. They're not who's opening new positions now on the institutional side. So that means that a greater proportion of cross-asset market activity can be attributed to other market participants, such as the ever-growing, massively levered retail community and the systematic community, both of which don't turn off or take a day off or not trade because it's near holidays. The only people who don't trade because it's holidays are people who trade for their primary work, or active institutional investors. Find me a retail trader, and I mean a serious individual investor who says, well, it's the holidays, I'm not checking markets. You know why you're not going to find that? Because when it's your own money at risk ticking around in live markets, there are no such things as holidays or sick days or half days. The institutional community, that doesn't apply to them. It's work for them. Work day. So, levered lira yen traders out of Japan are aggressive traders. They get margin calls, they liquidate other holdings to meet those margin calls, such as things like Bitcoin and things like Nikkei futures, E-mini futures, Nikkei double leveraged ETFs, which are, by the way, the most highly traded security by notional value on the Tokyo Stock Exchange. And yes, SPX, or SPY and NASDAQ ETFs and all of those, as well as their direct long positions in Apple and Tesla and other single stocks. Japan retail is very active in the US, in US single stocks and US indices, and Europe as well, but mostly US. So nobody's trading right now except for lira traders. Of the lira traders, a lot of them cross-hold Bitcoin and equities. And systematic flows further glue cross-asset flows together. So did the lira reversal put a floor under global risk assets, or at least select major global risk assets? I say reasonably possible. Could be a coincidence. But either way, I didn't draw these charts by hand. These happened in markets. If you'd like to say, no, they didn't, or no, they have nothing to do with one another, that's fine too, provided that you actually, took it into consideration, you did your analysis, and you found otherwise. If you're knee-jerk pausing to comment on how stupidly wrong this even is to consider, as in you haven't even, attempted to look into it in the first place, then, sorry, but I don't take spineless non-traders without any capital at risk seriously. Let alone make and present these videos for you in the first place. Irrelevant crowd. And finally, let me end on a more sort of serious note for once. So I know that for the majority of us, we're just seeing blinking ticker symbols and P&L gains and losses, right? But inside Turkey, this is not a financial markets matter. This is a deadly serious crisis. And I come back to Andrew Bailey's commentary on FX volatility for a nation's currency. It's not so much a plunge in the currency value that's destructive. I mean, obviously that is. But the path there also matters. And therefore, the level of volatility is what matters at this moment. That's what matters more so than the directional level of the lira. Lira 1 month realized volatility above Bitcoin is unacceptable. for like a real country currency, right? Keep in mind, like, what volatility means. It doesn't mean downside. It means huge price swings. Upside volatility exists too, and it's no more better than downside. So if you're a Turkish citizen with your currency swinging at 100 vol, how in the hell are you supposed to do anything? Like, if you think that this 50% rally in the lira over the last over 2 days is like relief for the people of Turkey, it's not. Not at that rate of volatility. Okay, so think about it this way. If you or I or anyone wants to open a Forex trading account, okay, we can't just do that. We need to prove that we're suitable to trade FX, with the broker, like the KYC. That either means that we have years of Forex trading experience, or we drop an initial margin of 10 million USD to register to do so. And so why? Like, why do we have to prove this? Because Forex trading is highly risky. And inexperienced regular people aren't suitable to participate, according to regulators and authorities, to varying degrees and all that. So whether or not you agree with these sort of suitability requirements and all that, it's not the point. The fact of the matter is that trading is not for everybody. Imagine an entire country's citizens who have no choice and are forced into being FX day traders, and that their livelihoods depend on them succeeding at it. And you're by default a lira day trader. Even opting out so that you don't have to, take this sort of FX risk requires you to take FX risk to do so, to get out of the lira, right? So here's why volatility is worse than a one-directional plunge in the lira. You're a regular person with a family in Turkey, just trying to do the right thing, provide for the family, good person, all that. You're a shop owner, you run a bakery, you're an auto mechanic, you're a computer engineer, whatever it is. You're a mom or a dad or a husband or a wife, and you're not a macro hedge fund manager, okay? You start seeing the cost of everything skyrocket, abruptly, and that every day it's just worse. Every morning when you wake up, your buying power is worth 2%, 5%, 10% less than it was when you went to sleep the night before. Day after day after day. Now, you know that you have to get the hell out of the lira and into dollars or to gold or to Bitcoin or to whatever, right? But, USD has doubled in the past month. So that makes it really hard to chase that, right? You don't want to chase that. But on the other hand, it's getting unbearable, right? So you figure, look, at this rate, where how the lira is just getting crushed, at this rate, by the end of the week, you're going to have nothing left. So, like all human beings who are amateur traders and professional traders, you finally decide to just jump in, right? And you decide to convert the little lira that you have left at this point into dollars at USD TRY 18. And for once, you have a kind of sigh of relief that although you could have secured yourself, a month ago and saved half of your net worth from getting decimated had you acted earlier, at least now you have a moment of stability for once. Then later that evening, Erdogan and the CBRT blast the market from 18, where you converted, down 50% in a day as the lira surges. And you take another massive hit. That's what volatility does. It forces regular people into becoming traders, and they do not want to be traders. They know they're not traders, and this isn't trading capital. This is their lives, right? They understandably hold out. They take losses to the downside, and finally at the lows, only to take, they trade and only to take another round of losses upon a 50% reversal. And this isn't just lira to dollars, right? This is trading in general. This is having stocked up on cooking oil before prices surge even more, only to have prices drop 40% the following day. You just paid 40% premium that you could have, gone that could have gone to buying a winter coat for your kid. Now, I've said in my last video that I feel very sorry for the people of Turkey, and but at the end of the day, I don't mean to be cold-hearted, but this channel isn't for sympathy. It's about objective financial markets analysis, free of any sort of personal emotion or, no different from like political bias or anything else that isn't like pure market reality based, right? No emotions in markets. So the reason, though, that I bring this up to consider what's happening on the ground and how that relates to market risk is because lira volatility will lead to domestic social unrest. It already is. Erdogan's approval ratings are at record lows. You combine that with someone who's increasingly power hungry and facing re-election next year. That is a combination that leads to geopolitical volatility, okay? Because you have clearly this individual, Erdogan, who has, hijacked the central bank and therefore the economy. So everybody knows that he is, for better or for worse, if good things happen or bad things happen, he is the one who is responsible for the economy, him and his decisions. It's not a group of people, it's this one person, right? And if the economy continues to deteriorate on the ground, in real, and hits people like in their real lives on an everyday basis, then you happen to also have the powers of, the state, you're going to potentially cause some sort of external geopolitical volatility to distract away from the economic misery happening on the ground. You add in like a Russia, Ukraine, nat gas supply, an energy crunch, all that kind of thing, like into the mix. Lira volatility can exacerbate geopolitical volatility, which then feeds into commodity volatility and then eventual global risk volatility. Okay? So, keep an eye on the lira and Turkey because, the Turkish citizens can't speak out freely, so we don't passively just receive headlines. So it's on us to proactively look at what's happening on the ground in Turkey. So that's about it. I hope that this was of some help. If people want me to make a market call on this, I would say that there's going to be continued volatility because there's just a lot of uncertainty. But right now it depends on whether or not the Turkish citizens buy into this program of Erdogan's or not. And I don't know. I don't know where they're going to, which way they're kind of going to look for that. And the foreign sort of speculators, their flows are also like on hold, waiting for a directional move by the Turkish local citizens, by and large. But in the long term, yeah, the lira is going to get crushed. Near term, couldn't tell you. And yes, I actually do believe that the lira did put a floor under risk assets. So will that, relationship last forever? Of course, it could be dead already. But that's what I think happened. So for whatever that's worth, thanks for listening and have a happy holiday.